Tesla earnings are coming on October 22nd, and the stock has been setting up a move that a lot of people aren't talking about on the market. Whether you're bullish, bearish, or just watching from the sidelines, this is the video you need to see before earnings come out. Today, we'll break down what's happening with Tesla's fundamentals, how the market's pricing it in, the technical picture, and what I'm going to be doing into earnings week. Tesla is one of the most widely held retail stocks in the world, and for good reason. Here we're seeing the stock price is holding at 435. It's been teetering at this level for a couple weeks now. But the reason it's been holding this high and the reason there's a lot of retail ownership is that it's not just an automaker, it's clean energy, it's AI, it's infrastructure rolled all into one. But the stock has been in a bit of a holding pattern recently, drifting sideways after a volatile 2024. That's why this upcoming earnings could be pivotal for setting the tone for the rest of the year and for the company in general. So since late summer, Tesla stock has bounced around key support and resistance levels, basically consolidating after its June, July rally, which we saw it really blasted off. And the price has held above the 400 to 420 support zone as I marked here on the chart. And you can see this has been acting as a really strong support zone, and it's been accumulating a lot inside this area. And so we could see that as a clear resistance coming into earnings, but also we could see there's resistance at the $450 mark, which is where I think the rally has kind of stalled and why we've been having problems, which is very, very concerning as an investor here. Why can't we not beat through this? It has been showing that the volume has been tapering, and it's suggesting that the market is waiting for a big catalyst, and the earnings, I think, could be that trigger. With on the front line, we got big news coming up with FSD, which is the full self-driving updates, and the beta expansion, which continues. This has been one of the biggest updates we've seen in the history of Tesla, and it rolled out exclusively to vehicles with the HW4 computer due to the system's intensive processing requirements, which seems bearish, but it's actually very bullish because the tech is so good that it can't even be processed on most of the devices that these cars have, and the technology is really on the next level that we've seen. There's been a lot of energy developments, and not only this, but there's been a lot of talk about the robotaxi platform that Elon teased for 2025. So we got to keep an eye on that as we come into this quarter. So what really matters heading into earnings, I want to point out, is the revenue growth. Last quarter, Tesla did $26 billion. Analysts expect mid-single digit growth this time, but the key question is, has the pricing stabilized enough to protect the margins which the company seeks? Because the gross margin slipped from 30% at peak down to 17 to 18% in the last quarters. Investors are going to be laser focused on whether margins are bottoming out and starting to consolidate at that 15 to 20 mark, or if they're going to continue dropping, at which point I think you could see a lot of volatility in the stock. Also, we could see, I think one thing you're going to watch is the energy segment. Watch for growth in the solar storage, and because it's been one of the most overlooked revenue drivers for Tesla. Also, the free cash flow. Tesla's CapEx spending is rising for AI trainers, clusters, and production expansions. But strong FCF is still critical for funding those projects without heavy dilution to any shareholders. Not only this, but I think you should watch out for the earnings per share because consensus is at 82 cents. But as we know historically, Tesla beats here, especially with better margins, and that could flip the sentiment fast and drive the stock all the way up until the analyst predictions, which are all the way in the, I've seen one that was even 600. So the bottom line is Tesla doesn't need a blowout quarter. It just needs to signal stabilization after a year of aggressive price cuts and movements that should have caused them to make more revenue. Also, let's check out the sentiment. Sentiment is actually mixed heading into the earnings for one of the first times, and retail investors are still extremely bullish. But as Tesla remains a top holding on Robinhood and Fidelity accounts, but there is a lot of bears as well. Of course, a lot of people that do not like Elon Musk, but I think he's been doing fine as CEO. Analysts, however, are split around 45% say buy, 35% say hold, 20% say sell. Targets range from 280 on the low end to 600 on the high end, as I said before. There's been some short covering recently as short interest has dipped slightly, but institutions aren't piling in aggressively yet, which shows that I think the earnings are what's going to drive this price and this sentiment really through the roof. So with this backdrop of the lukewarm analyst consensus, strong retail conviction, it often sets up for the big post-earnings volatility where we see either institutions piling in or piling out. So it's really going to be on either side of the wave here. But we've seen with the technical picture, Tesla is technically in a tight coil pattern, as 420 has acted as a strong base for months, and if earnings surprise to the upside, a clean breakout over 460 could easily target 500 in the coming weeks. But a weak report could send it back to the 380 to the 400 zone, where the 200-day moving average sits, and where it would even out and kind of balance out there. So as we can see, the RSI is neutral, not overbought, meaning there's room for a move either way, and the volume compression often precedes big breakouts or breakdowns. So this is exactly the kind of setups traders love going into earnings. So if you're playing options, I'm not going to give any advice unless you leave a comment down below and ask me for some advice. But either way, you're going to see a big move, I believe, on this earnings, and I think you're going to watch it very closely because it could define the future of Tesla and what we could see in the future. So personally, I'm not chasing Tesla right before earnings, but I'm watching closely for confirmation. If Tesla delivers on stabilization of the margins, healthy FCF, and solid guidance, this could be the start of a Q4 run that catches a lot of people off guard. On the other hand, if results disappoint, I'd rather buy on a pullback into the 380s than gamble on a binary event and like hoping that something happens when we have no solidary proof of something even being materialized inside that. So long term, nothing here changes the core Tesla story. But in the short term, the earnings reaction could set the tone for the rest of 2025 and the price action that we see inside there. So there it is, guys. The key levels, the numbers, and the sentiment to watch heading into Tesla earnings on October 22nd. It's coming up, that's only 12 days away, guys. So if you found this breakdown helpful, hit the like button, subscribe, and let me know in the comments whether you're bullish or bearish heading into the earnings. And remember, earnings seasons is where narratives often get confirmed or crushed. So do not get too worried about your stock picks after if you see a big drop or if you see a big gain. Just continue to hold and know that you've done your research well and that you trust in the right stocks and the right companies. So peace out, guys. Thank you guys for watching.